Welcome to what to do if you miss the filing deadline. So, my name is Chantel Wilkins, and I am the owner of RVA Tax and Financial Services. And we are going to talk a little bit about how to and what to do if you miss the tax filing deadline. Okay, so a lot of things could typically happen when we miss the deadline. It could be us procrastinating and saying, "Hey, I'm going to do this," and then later something comes up and then we forget all about it, and or either the lack of information. So we might not have all of the information that we need to be able to file our tax returns. And sometimes we don't know if we have all of the information that we need to be able to file our tax returns, or either unforeseen circumstances. So life happens, like life seriously starts lifing when everything starts going haywire. So that's why it's so important for us to make sure that we, throughout the year, we're keeping good records. We're writing down, if we can't remember, write down all of the jobs that you typically have had previous, so that way you know that you should be expecting a W-2 from them. If you had done any type of side jobs for any of the businesses that you work with, you would typically would have been paid as a 1099 employee, which means that you are technically considered your own business. So you will need to keep good records of the income and expenses that you incurred during any of those jobs. So you just want to make sure that you are remembering all the jobs that you had, because at the end of the day, whenever we file the tax return and we submit it to the IRS, our jobs that we already had legally have to report the income that they paid us. So the IRS already has this information. So when we file the tax return and we send it off to the IRS and they say, "Oh, these numbers aren't matching," or "You didn't report enough of your income," or "I see that you worked at BMW, although you only made $200 or $300, you still have to report it." So again, you want to make sure that you are reporting all of your income. Make a list. I would probably start in sometime November. So by the time January gets here, you kind of have an idea of what to be expecting in the mail, because your W-2s are going to be mailed out at least before January 31st of that year. And then 1099s will also be mailed out, but sometimes that doesn't happen. So it's really up to you guys to make sure you're keeping good records of all of the income that you have collected, because at the end of the day, we're responsible for paying taxes on that. All right. So I think I skipped a page, guys. Okay, so the next things is, let's talk about the consequences of missing the filing deadline. So basically, when the taxes are not filed by the due date, there is often a penalty imposed by the IRS. And the penalty is separate from any taxes owed and is typically calculated as a percentage of the unpaid taxes. So it's super crucial to understand the implications of any type of late filing. And so if you guys don't know, you guys make sure you look it up at the IRS.gov or reach out to a tax professional. It is okay to ask questions to the tax professional, especially when we are preparing your tax return. I personally love to talk to my tax clients because basically I'm learning more about your tax situation, and what I will be able to do to kind of help you lower your taxable liability. So there's a lot of questions that I may have while I'm onboarding my client to properly file their taxes. So typically, like I said, you want to make sure that you have all of the information that you need on time so that you are not having to pay any type of late filing fees. Sorry, guys, I gotta move this out of the way. Okay. So late payment penalty. So in addition to the late filing penalty, this is something totally different. The IRS may also impose penalties for late payment on any taxes owed. So typically, all of the taxes that if you owe, sorry guys, I'm getting my words all mixed up. If you owe the IRS anything more than $1,000. That money is due by April 15th of that year. If you don't pay it, then you will start getting the late payment penalty fee. Estimated taxes. So some businesses have to pay estimated taxes. Some individuals have to pay estimated taxes. So this means that you have to pay in quarterly versus at the end of the year. So typically everyone would have until April 15th to file quarter 4 of your estimated taxes, and quarter 3 and 2 and 1 was already due the previous year. So if you don't pay it by April 15th, then this is when the late penalty payment will start accruing. And then on top of that, interest is also included on any unpaid taxes. And the crazy thing is that the IRS, with this interest rate, it can fluctuate. And nobody loves a fluctuating interest rate. So that's why it's so important to make sure that you guys truly understand what happens if you don't get the taxes done in a timely manner. So if you can't get your taxes done in a timely manner, this is when you need to go ahead and put in the extension. But keep in mind that just because you put in an extension doesn't mean it's an extension for time to pay. It is only the extension to file the actual paper tax return. So if you have a balance that is typically due, then you want to go ahead and pay that. And let's say that we don't know what your balance is. So typically what I kind of do with a lot of my clients is, if we don't know, but we have now reached the deadline and the payment is due, is I'm going to look at last year's tax return. And whatever I paid in for last year's tax return is what I'm going to pay in this year before my tax filing deadline. Because 9 times out of 10, either you're going to owe a little bit more or a little bit less based on what you have brought in. But if you doubled your income from last year, you want to think and say, hey, if I paid $2,000 last year, my income has now doubled. Let me go ahead and put in an extra $2,000, and that's going to put you at about $4,000 that you would have paid into the IRS. So that way you're at least covered. So next we're going to talk about minimizing the penalties by filing as soon as possible. Even if you can't pay, filing on time is crucial, which is kind of what I was talking about on the last slide. Just making sure that you file on time in order for you to minimize any penalties, because if you miss or pass 415, that's when these penalties are going to start kicking in, and they can get astronomical. There's a lot of clients that I have dealt with that have $2,000 and $3,000 of interest on a couple $1,000 tax payment that was past due. So if you're already having issues saving for your taxes, and this is something that you have going on every year, then that is time for you to sit down and talk with a tax professional or accountant, or better yet, a profit first professional, to kind of help you get your finances in order, because we always want to make sure we're saving and putting away for any taxes that we might owe, so that we don't get any bigger fees later on down the line. Okay, so consider an extension. So the valid reasons for filing an extension and extension deadline. So like I said, so if you're filing a 1040, your extension deadline is on 4/15. So if you don't file your tax return or don't file an extension by 4/15, that's when your penalties are going to start kicking in. So the tax extension is granted by the IRS to individuals or businesses who require additional time to prepare and file the tax returns. So some of the valid reasons for requesting an extension could include some of these things, like a complex tax situation requiring more time to gather the necessary documentation and information. Personal or family emergencies that have affected the ability to focus on tax preparation. Delays in receiving essential tax documents, like I was talking about before, not getting the 1099s on time. Some of my clients literally got 1099s about a week ago, and we are already in May. So that could be a reason why we need to go ahead and file an extension, because you may not have received all of your tax documents. And then, of course, any type of unforeseen circumstances that have disrupted your ability to meet the original filing date. So if any of those type of things, there's other things that could also be a valid reason, but this is just a couple for you guys to kind of have an understanding of what you could have as a valid reason. The extension deadline. So the deadline for filing an extension varies between the jurisdiction and the type of tax return being filed. So for the 1040s, if you're doing an individual tax return, then you have until 4/15. But if you have an S corp or a C corp corporation, then you have until March the 15th to file your tax return or to file your extension. So the steps to doing that is you want to obtain a form called 4868. So you can download this form from the IRS website, but typically if you are working with a tax professional, they'll be able to file that electronically for you in a very timely manner. You'll need to, of course, but if you do have to fill it out, of course, you need to download it, fill it out, and then you'll need to submit the form to the IRS. And keep note, so like if you are doing this on 4/15, you want to make sure you take this to the post office so that it has a post-dated date of 4/15. Because if you do this and let's say unforeseen circumstances happen or something happened, like for instance, I have 4 girls, like there's never a dull moment in our house when a kid doesn't call me and something is going on, whether it's at school, them dealing with their friends, um, anything. So basically, if I'm one of those procrastinators and I'll wait until the very last minute to get this extension in, and then I don't make the post office by the time they close. And sometimes I'm in Spartanburg, South Carolina. So sometimes our post office here in Spartanburg closes at 4 o'clock or 4:30. And sometimes on Fridays, I think at 2. So if we don't get there, then we don't get that post-dated stamp to say that, we're sending this out on 4/15. So you want to make sure you get that. It's super, 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 super important. So allocate some time to solely focus on you and preparing your tax return and collecting that information. And then, of course, when you do submit this to the IRS, make sure you keep a copy. You also want to send this certified, not in regular mail. So that way, when it is delivered, that someone from the IRS department is signing for your paperwork. So, and then make sure you also keep a copy. Everything that you send to the IRS, keep a copy of it. Just to make sure that yourself is staying in compliance with everything. Okay, so go here. Sorry guys, I keep missing. Sorry guys, apparently I am ahead of myself over here. Okay, so the next is pay what you owe, and not a penny more or not a penny less, because if you pay a penny less, the IRS is coming. So you might want to make sure you're paying everything that you owe. And then also, who wants to pay more money to the IRS? Typically, I don't like to give my money to the IRS. I feel that it's an interest-free loan to the IRS. Because we're giving them more than what we technically should. So the IRS does have a form on their website, which is like a calculator, honestly, of where you can fill out your information and put in like some of your income, how you're going to be filing, married, filing joint, single, or married filing separately. So all of those statuses affect your tax return. But on the IRS.gov website, you'll be able to fill that information in to kind of get an idea of what you might owe the IRS so that you can make sure all your coins are together. So when it comes to paying any taxes that is owed, the IRS does have several payment options. You can mail in a check, which I personally wouldn't recommend because they do take a while to get the check, processes it, and then clear it. So my personal opinion, I would pay online. And then when you do pay online, make sure you download a copy of the receipt saying that you did go ahead and make this payment and attach that to your tax return. They also do have payment plans. So if you're not able to pay the amount in full, you'll be able to set up payment plans, also known as installment agreements, which allow taxpayers to pay their taxes in a monthly installment based on their financial situation. So let's say if you owe $3,000, then you can contact the IRS to set up a payment plan, and based on what you'll be able to afford, that's what your monthly payments will be moving forward. And like I said, there's several different options. You can do the electronic payment options, which is on the irs.gov/payments. And then you can do the online payment agreement tool. That's also listed on the IRS website. And then the form that you'll need to file is the 9465, which is the installment agreement. And you can start working on that on the IRS website also. Or either you can do a direct debit installment, which is also located on the IRS tax return, the IRS.gov site. Now, with the direct debit, your tax professional can also do that. We're able to set it up depending on your software, but we're able to set up a direct debit when we're filing the tax return. So when we get ready to submit it, the taxpayer can say, hey, Chantel, I want to go ahead and make sure I pay this on time. So let's set up the direct debit for this, $1,500 to come out of my bank account on 4/15. So then that way I don't have to, worry about any interest or late filing penalties. And we're able to do that on our end. Now, I don't know if it's the same with your tax professional, but at RBA Tax and Financial Services, we're able to do it. It does have a big play on what type of software that your tax professional may be using. Okay, so communication with the IRS. So I understand that this can be challenging for a lot of different people. So basically, guys, communicate with them. So don't run and hide, or don't respond to any of the letters that they're sending you. So make sure you are responding. So let me just put it this way so I can make sure I'm making sense. I'm telling you guys this. So do not ignore any letters that you get from the IRS, simply because when you ignore them, sorry guys, my bracelet keeps getting caught on my shirt. But when you ignore the IRS, that's when they're really going to start coming after you, because they're just saying, hey, you're not taking this serious. We're going to tack on more interest. We're going to tack on more penalty fees. And if push comes to shove, they might come out to your place of business or your place of residency, or even worse, put a lien on your bank account. Like, I've had so many clients come to me with a lien notice from the IRS stating that a levy was going to be put onto their account, and they're going to just pull out the money. So for instance, instead of you setting up a payment plan and you controlling the situation, the IRS will now control the situation. And then, so if you owe $2,000 to the IRS, they're going to say, what bank do you bank with? Oh, you have money here at Bank of America. So I'm going to send a letter to the IRS, and they're going to allow us to levy your bank account, and I'm going to take out $500 or $600. Now, they're not going to say, hey, can I take out this $500 so to put towards your tax bill? They're just going to take it. So when you go to the bank and you don't have that money, and you might have to pay a mortgage or a rent or a car note, you don't have that money because the IRS has taken it. So therefore, you're not in control of the situation anymore. So you want to make sure you stay in front of the situation at all times, so that they don't just go in there and take any funds from your account, because they can do that. So let's talk about exploring options with the IRS. So when contacting the IRS, taxpayers have various options to explore based on their specific needs or circumstances. So some of the common inquiries or requests include asking questions about tax notices. So if you don't understand, don't sit there on the paperwork and just oh, I don't understand what it means, so it is what it is. That's not the solution. If you don't understand, call the IRS. Contact them and ask them questions. They are there to answer your questions. If you don't want to talk to the IRS, hire a tax professional. We're able to we're trained to understand your tax notice so that we can help you understand it a little bit more. And then also, some of us are able to take care of the tax situation on your behalf. So like if you don't want to deal with the IRS, it's totally fine. Like at my firm, we're able to represent our clients. So if my clients get a tax notice from the IRS, all they do is upload it to their client portal. And then myself and my team is working on that tax notice to either get the penalties abated, negotiate on a payment plan on what you guys or what my clients will be able to afford, or either go into tax court. So like if my clients have to go to tax court, we're able to go into tax court to represent them on any of the tax issues that they may have and get those resolved. So having a good, knowledgeable tax preparer is so important to make sure that you guys are staying in compliance with the IRS, because we don't want the IRS coming after us. We just want to make sure that we're doing what we need to be doing on our end and then submitting the information that they're requesting. Payment options. So taxpayers who are unable to pay their taxes in full, like I said, you guys can explore a payment plan so that you guys can, or either like an installment agreement or offers in compromise, or even a temporary delay in collection. So depending on what situation you have going on, if you just contact the IRS and let them know, there's different things and different programs that they can put you in to be able to help you with the tax situation. Also filing an extension or amending the return. So if there was something that was not reported on the tax return, you already submitted the tax return, you can amend the tax return to correct those issues. So taxpayers who need additional time to file their tax returns, like I said, you guys can always file an extension, and those who need to correct any errors on any previous filed tax returns can file an amendment. So identity theft or fraud concerns. So any taxpayers who suspect identity fraud, identity theft, or fraudulent activity related to their tax accounts can contact the IRS to report the issue and take appropriate action to safeguard their information. So for instance, this past tax season, I had a client, that was working with, the story is so bizarre, you guys, but she was working with an insurance agency, and they were talking to her about setting up her health insurance. And then something happened to where on her tax, someone filed a tax return for her and claimed like $400,000 of income. And when we went to file the tax return, the information was already submitted stating that she had already submitted a tax return. So we had to do like this huge investigation on what happened, how it happened, and why it happened. So she had to do a lot of backtracking of the people that she talked to and gave this information. So what they've done, instead of giving her a quote, they actually filed a tax return for her. And that is when we had to file an identity theft claim. And we also applied for an IP pen for her. So if you guys have any concern about anyone ever filing a tax return on your behalf that should not be, or claiming dependents that do not belong to them or do not live with them for at least 6 months of the year, people are claiming them on their tax return. So what I instruct my clients to do is to get an IP pin, not only on yourself, but also on the dependents, because that way it's going to safeguard your information and no one can file a tax return, not even a tax professional can file that tax return without the specific IP pin number that is issued from the IRS to the taxpayers every year. And this IP PIN number changes every year. So every year in January, if you have an IP PIN number, you will get a new letter in the mail every year in January with an updated IP PIN number, and you'll need to provide this to your tax professional or your CPA or accountant or whoever's going to be doing your tax return. So you want to make sure they have that information. Otherwise, they won't be able to submit the tax return. Um, Learn from your experiences. So a lot of people continue to make the same mistakes over and over. And sometimes they just don't get it. But make sure you're trying to at least learn from those mistakes so that you can make sure that you're staying in compliance and don't end up in that same situation again. So with the tax returns, make sure you're organizing your documentation. Stay as organized as possible. So make sure, like I said, make sure you're organizing any tax related documents because it is so crucial to have this information to be able to file an accurate and efficient tax return. You guys should also develop like some type of system to be able to document throughout the year. So with some of my clients, I tell them to use an Excel spreadsheet because that's easiest for them to keep track of everything, or either upload their documents to a secure file, or with some of my clients, I give them a flash drive. And so all of their tax documentation will be loaded onto this flash drive for safekeeping. So no matter what, as long as they have that flash drive, they'll be able to either give that to me as their tax professional or give it to their tax professional with all of their tax documents listed on there. Create folders. They can be like the paper folders, or they could be digital folders for different types of documents, such as income statements, expense receipts, investment statements, in any type of tax form. So if you organize it this way, you know that you'll have all of your information all in one place. And guys, it just feels so much better to be organized. And if this is something that you guys struggle with, this is even more of a reason why you need to be working with a tax professional, because they're going to help you make sure that we're collecting all of the documents that pertain to your tax return. And sometimes we can kind of ask you certain questions to help you remember what jobs that you had or what income that you made throughout the year. Keep digital copies of all of your documentation, because, and then also like keep receipts, any tax forms to ensure that they're easily accessible and protected from any type of loss or damage. And then regularly review and update your document organization system to keep it current and relevant to your tax situation. So things change every year. Tax law change every year. Some things pertain to the tax to you guys as a taxpayer, and some things do not. So make sure you're updating the system at least once a year, so that you guys are staying all organized. And then another thing that you guys can do is set reminders. So I am definitely the person to put reminders on my calendar because I always have my phone or I always have my iPad with me. If there's something that I need to do, I'm going to put it on my calendar. I'm going to set the date and time that I want it to alert me. And I say, hey, Chantel, it is time to organize all of your tax documents. And I block off at least 2 hours to do this. I mean, sometimes it only takes me about an hour, but at least I have that extra hour to make sure that I do have all the documentation that I need to properly file my tax return. You can also set reoccurring reminders for regular tax related tasks. So like if you're a business owner, this regular occurrence would happen every month is for you to sit down at the end of the month to kind of go through all of your income that you made for that month and go through all of the expenses that you had occurred that a month, so that you can go ahead and document that and then, not worry about it. Because once it's done, it's done. You won't have to worry about going back to document all that information if we're doing it month by month. And then also maybe consider using email alerts or notifications from like your calendar, like I was just talking about, or like with some of my clients, I do send out an email. So like if I have business clients, I do send out an email every month with information that they may need to be keeping track of. So you guys are more than welcome to sign up for these notifications. Also, it's our monthly newsletter. So it goes out every month to our subscribers, and it gives you tax tips on things that you can do to minimize your taxable income. And that's for individuals and businesses. And then If you have any questions, then you'll also be able to reach out to my team to set up a consultation meeting for us to have a conversation so that we can better help you understand your tax situation and what you need to do to stay in compliance. Um, so that's pretty much what I wanted to kind of go over with you guys. I have come across a lot of people that missed the deadline, and their questions were, I missed the deadline, now what? So that's why I wanted to kind of go ahead and put this seminar or this little training class together for you guys so that you guys understand what you are responsible to be doing as a taxpayer. On a annual basis on filing the tax return. So thank you guys so very much. We're going to jump into our questions so that we can make sure you guys are taken care of. But again, thank you guys very much for joining us. And again, my name is Chantel Wilkins, also known as the Tax Queen with RVA Tax and Financial Services. You have a wonderful day.